Good morning, everyone. My name is Josip Kosic. Today is July 19th. Welcome to our session. If you can type in a chat box that you can hear me, I would greatly appreciate it. We are not financial advisors. I would highly encourage you to take a moment to read the disclaimers that are on the top left corner. We're going to be placing some of the trades, which are strictly for educational purposes only. Good morning, Joe. It's good to see you all. And we are going to go over the big picture. And just before that, I want to show you a place where you can get in touch with me on our website. So this is trade with unfillorders.com/Joseph. When you scroll it down, there's this Excel sheet on which I usually place the notes from the trade that we do in a previous session. For instance, over here was a trade that we did in the last session. It was a trade with explanation, with all the profit and loss graphs, so you can get in touch with me. So today's session is concerning the big picture, or what the market is doing, and we're gonna start by looking at SPY. SPY is mother of all products. It has had a huge move yesterday. I'm going to just switch it to the cash and explain it, what really happened. We traveled almost 90 points from the 39.10 to the 38.20. So we were reaching here at 39 even, and then we dropped all the way to 38.20. That's like 80 points move, and this is very, very, very significant. And then this morning, to everyone's surprise, we simply gap up, and as of now we're holding. So one of the things that I usually uh, visually mark on my finviz is low of the first bar. So as you can see, Dow Jones has gapped up here. This is a vacuum. Nasdaq, interestingly, after gapping up, it tried to fill the gap, but then buyers stepped in around this round number 11,450. And same thing, S&P was trying to go lower, but then buyers stepped in and held it, and now it's up. So this is quite significant, because everybody would expect after such a big move down that we're going to continue going lower, and we're not. The one thing that I'm kind of concerned about, and I don't know if this is sustainable, because most likely before the end of the session, this extremely steep uptrend, especially on a Nasdaq, so if this is a 45 degree, this is definitely more like 75 degree. And over here, it's maybe like 60 degree. It's not really sustainable. Every time when we have a move like that, there needs to be a breather. As of now, there's a sea of greenness here taking place, and one particular sector that is leading everything up is basically technology. So we're definitely going to be looking at the technology. So the big picture is not just like what is a one-day move on the SPY, but what is really taking place in terms of the uh, trading opportunities that we can still catch. And one of the ways I would like to see that, good to see you, Jeff, good to see you, Mark, is option volume map. So just before we get to the option volume map, I want you to be very aware of the fact that we have this huge gap here that is taking place. And again, we have an unfilled gap from last week right here, and then we had also unfilled gap here, but then we had the gap down that filled us. So those gaps do get filled. It's just a matter of time. Sometimes you need to wait a couple of days. Sometimes you need to wait the entire week. So what is interesting here in terms of our analysis, if we are starting right here looking at the exponential moving average, which is a 9-period exponential moving average. We've been above, we've been below. Yesterday we closed right at it. Today we gapped up, and we are holding. So really, I mean, this is a very volatile season, and one of the ways to know what the market is going to be doing is to actually look at the sectors. So I'm opening up the page that it's not the monthly because I don't want to do that right now. We're not in a sharpening session. We're in a live trading session. I have here 4 main sectors workspace. And when I bring it up, I'm going to try in this hour to go through 4 of them. But if I find a good trading opportunity on the one, I'm going to just focus on that trade. So let me explain what these things are. So XLK is the technology, and that's the one that's been leading everything up. The next sector is healthcare. Then, of course, we have a financial, and the last one we have a communication. Of course, communication is almost like a subgroup of this technology. So we're kind of connected with it. So what I'm planning to do this morning is really utilize option volume map. Last time when I did the session on that, I got a good feedback from a number of you, and I want to really take my time to explain it how we can actually use that tool even before we go to the option chain and see how everything is shaping up, and then basically decode these footprints from these big institutions. But again, let me just set out some of the rules. First of all, we're going to be looking at the 4 digits transactions of the volume today, and also of the open interest. So one of the things that we can do is simply put the mouse here on a chart, single right click, and when we go to the add study, there's only 2 add studies that are proprietary. So if you're looking right here, of course, we already have auto UFOs, and we also have here option value map. This is the second proprietary tool, which is patented, and that's what we want to actually insert. Now, when I click on insert, I don't want to have too many choices. I just want to have one single choice, and it's going to come with the 3 strike prices up or down. And if I don't like this, I'm going to be altering it. So let me just explain this. If we're right now sitting at the 133, I will have 3 strike prices above the 133, and I'm going to have 3 strike prices below 133. So I'm clicking add, I'm selecting the option volume, and this is what I'm talking about here. I will be reducing number of months to single month out. And again, I'm not using the weeklies. I'm just using, and I will still use, as I mentioned to you, 3 strikes up or down. But if I want to have a bigger picture, I will be then maybe changing this to 6 or something like that. So right now, be aware of it. We're sitting at the 133. And because we're sitting at the 133, when I insert this, I'm going to get the limited number of the strikes up or down. So here it is. So I don't have my chart clouded with the information. I only have what is really absolutely necessary for me. So one of the things that you would notice right here, that I have a line here that is showing to me activity on this uneven number, 132.50. Okay, what do I mean by that? Well, the strike prices are going in a 50 cents increment. So of course, if we are currently trading around the 133, and right now it says the 44 cents, then I'm having the 50 cents increment up and a 50 cents increment down. So I personally feel that I would like to add more strike prices so I see the more activity, because right now, as you can see right here, I have here activity at the 132.50 on the put side, which is a red indication, and I also have on the call side. So what I'm going to do right now, I'm going to single right click. I'm going to go where it says edit studies, and I'm not going to be editing the UFO. I'm going to be editing option volume. And instead of asking 3 strike prices, I'm going to select the 6, because most likely the 6 is going to bring me also the activity of the 130. And over here, I'm seeing 131. I'm going to act a little bit more activity here because I don't think I asked for enough. So instead of asking for 6 strike prices, I'm going to ask for 9. Again, I'm going to click apply. Okay, and now I see the 131 activities right here. And we have now volume here. Okay, if I click here on price, it's going to tell me what is the individual price of these units. So for instance, call unit right now, it's at $4.35. So let me just circle this. But the put unit is also at $4.25, which means if we add up these two numbers, we get something in range of about $8.70. So that means right now they are expecting that there can be an $8 move within today all the way till the August 19. What does that really mean? So let me just bring this up here and simply explain it. If I type in XLK, you will notice that it's a technology sector. Technology sector has moved today already $2.25. So this addition of the at-the-money call and at-the-money put is anticipating that the price action could go up from the current price, either $8 higher or the $8 lower. That's what this anticipation move means between today, July 19th, all the way till the August 19th, which is basically a month. So within the month, they're expecting the $8 move up or $8 moves down. So be aware of it. As I'm moving these strike prices down here, I'm seeing the activity at a different level. So I'm seeing the activity at a different level, and I can consider entertaining some of these activities as a part of the directional trades. I'm going to just pause right now here and jump into something else, and then I'll revisit this in a moment. So be aware of it that all that I'm doing right now, I'm just going back to the monthly setup of the QQQ, and I'm observing that we have in Japanese it's called harami, which translates in English as a pregnant woman. So this previous bar of the June is a red bar, and that would be a mother, and this green baby or the current July month is bullish as of now because it measures from the open to the current price, and there's a high chance that this is now a reversal. Now again, if this thing is gonna lift, most likely it would need to head towards the high of this June. So I'm gonna just quickly change this QQQ, which represents the whole technology sector, into the specific of the XLK, and I'm going to observe how different XLK is. So we have on the XLK a very, very clear downtrend. There's absolutely no doubt that we are creating the lower highs and the lower lows. But at one point, what ends up happening is that we stop creating the lower lows and we start creating a higher lows. So if you're looking right now, this particular indication is that we are no longer going lower, we are trying to go higher. So it's going to be a confirmed trend if we also create a higher high, which we would need to wait for entire bar to move. That right there is as much of technical analysis I'm going to give to us considering placing the trade on XLK. So placing the trade on a XLK is what I have in mind. And then we can move to the healthcare, then we can move to the communication, and we can move to the financials. So I'm going to go into the option chain for the XLK. I'm going to select specifically that expiration, which is August 19th. So I'm going to get rid of the September. And now I'm only looking at the August 19th. And I'm going to also pull up here multiple strike prices, because as you're looking right here in this area, you will be noticing that the strike prices are in a 50 cents increment. So we have a 128.50, 129, 129.50, 130, and so on and so forth, right? So if I want to now look at the put side, I would need to bring into the vision our activity right here. So again, let me now use a kind of same approach for the puts. I'm going to be using the red demarcation here, and these are the puts, and these are the activities, and we are right here at the current price, which is 133.50 approximately. Okay, and there's a very pathetic activity in terms of volume today. One contract traded and open interest is 4. But there is something that is really poking my eye right here at the 130 level. There was a 620 contracts traded at the 130. Well, this is where the whole thing comes into a play. And I'm going to just take a snapshot of this because I don't want to redraw this thing later. So I'm going to be actually dumping it here in my Word document, where I said that we have an agenda in which we are going to be looking at the option value map. So we're looking uh, at the option value map of the XLK as a possible trading candidate. And I'm pointing out to you that as much as I would like to have a 4 digits activity on the put side, the largest activity is 130. And this begs for me to revisit the chart and look for the UFOs that are there on the chart and to see what is really taking place. So I'm going to go back to my 4 main sectors, XLK, and see where is that 130 area. Now, of course, I'm here on the daily, so I would need to drop down the time frame to, let's say, something like 144 to see where is that 130 area right there. And there it is. There is a UFO at that area. Is kind of making sense, Jeff, Mark, Joe? Please type it in, because I don't want to contradict these two proprietary tools that exist. So automated UFOs are confirming to me that I have a demand zone around 130. I'm considering right now to sell, and let me type this in, to sell 130 put for, of course, a credit, and to use that credit to finance buying. And here's the punchline: not the call, but the bull call spread. So right now I'm actually considering, and let me just bring this back in and spell it out, what we are planning to do here. So we're planning on XLK that is currently sitting at the 133 and whatever the change is, to sell out of the money 130 put, and I should specify here for August. And that's supposed to bring us a credit around, I drew this line right here, but it's somewhere close to $3, right? $2 and whatever, 88 cents, something for that credit. And then whatever the credit we take, we're gonna utilize to finance a bull call spread also for August. Okay, So if this is clear, then I'm going to move on. And again, this is just one of the trades that I'm going to be looking at placing this morning. So it's not the only one, but it's a one that I'm going to be looking at the placing this morning. So again, what I'm doing right now is inserting again auto study for option volume map. I'm going to be looking at least 9 strike price. Let's even like put 10 strike prices. How many months out? Just one single month. So I don't get my vision clouded. So less information is actually more. And when this thing loads up over here, what you're going to see, let's see why it didn't happen here. The study, option value map. Studies or where is it now? Oh, you know what? I need to change this to daily. Sorry, my bad. Just give me a second here. It needs to be on a daily to be able to see it. Okay. So now when I'm loading these things up, I'm asking you just to focus now on the blue side. Don't focus on the red side, because obviously the red side has already been taken care of. We already picked the put that we want to trade, right? So everything right here is what you shouldn't be focusing on, for a simple reason that we have already addressed it. But is there something there that is really poking your eyes and that is just screaming at you on the blue side? Well, of course, there is. And we are going to focus on over here on 132 that has a lot of activity, and also up here at 136 that has a lot of activity. So what is that? What is that? So 132 is a call that has intrinsic value. So let's see if I can now create a table that is going to make perfect sense to you. So we always have a put side and we have a call side. So this is now call side. So we're currently sitting with XLK at the 133. I'm going to put it down here so it's a little bit more visual. And if he ended up buying to open 132 call, that is already in the money by 1 point. And whatever that extra few pennies are. And then I'm looking at selling up here out of the money, way out of the money, way out of the money. Selling to open 136 call. That is out of the money. And when you're comparing to the current strike price, 33, 36, that would be 3 points out of the money. But I don't want to spell this out. I don't want to spell this out. So that's mean on this side right here, perfect, we're selling to open 130 put to get some credit. Whatever credit we get, we use to finance our buying of this. In this case, it's a $4 call. It's a $4 call. If this is making sense, please type in something so I can move on, because I still have 3 other ones that I want to look at right after this. And then just before the session ends, we're going to fire one of them in. Now, there's no guarantee that I'm going to find the same trade on financial, same trade on healthcare, or same trade on communication. I might pull up the open interest in the volume. There's just nothing there. There's just nothing there. So I'm going to just take a sip of water here while I'm waiting for you to interact with me. Now, again, if I pull up the option chain, I'm ready to place this, and let's say they traded to 137, or there's a better liquidity or whatever, I might actually change this. But as of now, this is what I'm considering. This is what I'm considering. So let me now jump in the Thinkorswim. So this is already open here for XLK. We're sitting at the 133.65. We were considering buying the 132, and I hope you are aware of it, that and I'm going to use blue here so it's less confusing. So this is a blue 4 digits right here, and this 4 digits is that 132. So are we good with that particular call? So this 132 call, it's in the money. If we are sitting here at the 133.66, that's in the money by $1.66. So let me prove this. So I'm going to change the volume into intrinsic and go over this one more time slowly. So same concept. Using the horizontal line to capture the 132, using the intrinsic to point out that is $1.67 that gets added on the top of this 132 and gives me the current price of the 133.67. So if that's good, then we can proceed. Wow, for that $1.67, they want to rip me off 560. Oh, I thought volatility was low. Yeah, but you're not buying just volatility. You're also buying time, because look how many days you got. 31 days. Okay, so let's now visually go elsewhere. Do you see another big activity that is poking your eyes? And what is the strike price? 137. So I guess I was slightly off. I said the 136, but I'm going to do 137. So if I were about to do this, out of this 560, $2.74 is going to come back to me. $2.74 is going to come back to me. So let me just take a snapshot of this. I just want to have that in case so I don't mess up here. Okay, so 132 buy. Change this to the 137 even. It drops to 271. Let's just fire it in and be aware of it that we have now spent $2.71. $2.71 is what we have spent. So now that I know that with certainty, so my debit will call is costing me $2.71. I wish that I can get that 271 back. I wish. And by the way, I do need to change this to 7. Okay, so let's do the math. This is a $5 spread, right? So my 137 slash 132 is a $5 spread. From that $5 spread, if I subtract the 270, what is the most that I can make? 230, right? So when you add this thing up, that's what I can make. So be aware of it. I'm gonna do that on the top in a moment, but I want to just finish the logic here. I need to find out how much am I getting for this August put side. Okay, so this is August call side, this is August put side, and of course this is just nothing else but the strike price here. This is just a strike price right here. This is a strike rate. I don't need to say strike price, but you see this is the current price right here. So let's tuck this away. I'm hoping to get $2.70 for my 130. Very close. Actually, I got even more. So I'm getting the 279. So let's see if I can sell this. Now be aware of it. I'm selling this. Oops, not as a vertical. I'm selling this as a sell, as a single. So 279. I can actually ask for more. I mean, I doubt they're gonna fill me for. That would be wonderful if they gave me 284. But be aware of it when you click this. What's your buying power? 13,000. Where do you get the 13,000? Well, this is a 130 strike price times 100. That's a 13,000. Out of that 13,000, we're subtracting this current 284 if I get filled. So let's see, do I even have in that particular account that much? I don't know. Let's just see if I'm going to get rejected. No, I didn't get rejected because this account has enough money. So it didn't get rejected. So I go over here. So I got filled here, and I have a working order for a 284. They're not giving it to me. I'll just drop it. Don't ever do this, but I'm gonna just do it here because it's for educational purposes only, and I'm in a paper, and I got 279. Okay, so I completed my activity here. So we got 279 credit. So be aware of it. Now I have finance. Okay, my 130 put for 279 has finance my August bull call of $2.71 and net $8 difference, commission, and all this. If this is good, I would like to jump to another one and another one and another one, right? But I want to get this filled up here with the option chain. Let me just get my option chain back. Oops, I click on the wrong thing. Please forgive me. I need to just go back here on option chain, XLK. One more time, we are picking up the August expiration. And we have August right here. I'm going to right away jump and edit the spread because this would be a bull call spread. So here's a bull call. And when I go in the edit spread, they always fill up the wrong numbers anyway. So I'm 132 and I'm 137. And when I click this, it loads up. And now I can go into the risk graph. And on the risk graph is going to show you, okay, it's off by the penny. This is 272 and this is a 226. It's pretty much the same math that we did before when we were looking at this. So I'm going to just tuck this away. So later on, when I bring in this worksheet from what the session was, I can just put it in, and then you're going to have that information. What's the break-even point? What's the maximum risk and all this. Okay, I'm ready to move on to the next trade. I just need to make sure that I put this in. That was my put side, and now I'm doing the bull call. So this is a bull call spread with the math behind it. And here's a bull call spread explanation of it that I did in terms of the strike prices. I personally love these kind of trades because they make a lot of sense. They're just, so I'm risking $2.71 to make the $2.29 right here. This is slightly off, because this thing is open and it's living. So I have done the half an hour of explaining how I do this, and now I'm going to have 3 more examples of just doing it. So by the end of the session, you're going to have 4 examples of me going through it. Now, disclaimer. There's no guarantee that financial, healthcare, or communication sector might have enough activity for us to do this. But we'll go through the steps. So either way, so it's almost like I'm going to shop for shoes at DSW, which is one of the stores here near my house, and I go there and I walk out and I couldn't buy the shoes because I had in mind particular shoes, particular color, particular size. If those things don't align, I need to go to some other shoe store. I might not find in that particular store what I want. So XLV on a daily, does it look bullish? Well, yes and no. we are off these lows. We're off these lows. Is the healthcare going to go up or is it going to go down? Well, I know the prescriptions are not going to go down. Prescriptions are going to go up. So we're bouncing here. But then also you can make an argument, and let's change this color, that overall the trend is what? Down. So are we in some kind of symmetrical triangle? Yes. So I would not be surprised that if we can use this as a target right here and maybe finance it with 125 or something around the 121, 122, if I'm going to be repeating the same steps. So this is just me eyeballing what I want. So in an ideal universe, I would be willing to sell something here around the 120 put. Okay, so that pretty much follows the same logic of what we did with XLK. I'm selling a put for a credit. Whatever credit I get, I use that money. I use that money to buy the bull call. But if I'm the only one thinking that, an institution hasn't done it, trash. Everything is trash in that case. So, what's the other step? Other step is add a study, and I'm gonna keep these things as simple as I could. Just give me 1 month out. I don't want a 3 months. I just want a 1 month out. So, so I'm sticking again to August. I'm gonna ask for more strike prices because I don't know if they're gonna put like 50 cents strike prices for me. I'm here on a daily, so when I agree with all this, it should load up. Last time it didn't load up for a simple reason that I had uh, I had a 144 calibration. And take a look. Isn't this call poking your eyes? There's a lot of activity right there at this particular level. So I have a target here of the 133. That's very 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 helpful for me to know. Very very helpful for me to know. So let's change the ticker. Instead of K, we're gonna have a V. Same expiration. I'm looking at the open interest. Oh boy, this is really poking my eye. And I'm gonna be consistent with the colors. If I'm working on a call side, I'm gonna use a blue. Is this kind of making sense to you guys now as we're doing second time around? Or if you feel that this is too costly for you because it's over $500, then maybe you can just pick this one. Now, disclaimer, disclaimer, disclaimer. This is aggressive because it's out of money. It's out of money. It's out of money. Okay? Yeah, but the cost is less. Yeah, I understand this, but what about if you have $1 down? Then you end up holding the empty bag with absolutely no intrinsic value. What is intrinsic value on this 129 call? This 129 has only 34 pennies of the intrinsic value, and you paid for it 10 times more? I mean, think about it. This is 34 cents. You're paying almost like $3.40, $3.20. So I personally I would not want to pick this one if I'm a buyer. I would not. But I have no problem maybe selling. Let me now change this to red because now I'm talking about the put side. So now I'm talking about the put side. I would have no problem selling this particular one because I'm not allowed selling it. The only problem that I have, ladies and gentlemen, instead of getting the rich $3 or whatever we got on other one, 279 when we sold, I'm getting only $1.27, and that $1.27 better be enough for me to place some kind of trade up here. I don't think I like this at all. Okay, but you know what we need to look? We need to look at the 133. What is the activity on 133? And I see pathetic activity. This is not good enough, ladies and gentlemen. I will not be placing this trade because the highest activity that I have in terms of calls, and let's again use the blue, is right here with the 3000, and that is only 72 cents away from it. I'm late for that trade. I'm late for that trade. I'm gonna pass, and I'm gonna go back to what I want to explain this to you. that we have here 4 candidates that we are looking at. Just 4, okay? So we have the XLK, we have the XLV, and XLV is what? Pass. Down here we have a XLC. We don't know yet what it's going to be about that. And we have a financials, but I want to disclaim it, like, be aware of it. Financials are going through the earnings season, right? So you can have a lot of fireworks. Again, that's why this is for educational purposes only. Be aware of it with JP Morgan earnings, with Bank of America earnings, with all of their earnings, like that's going to affect us. So on XLK, we got a trade. We got it, okay? On XLV, for August, no trade. So we have another 20 minutes. I'm going to look at XLF. I'm going to look at XLC. There's no guarantee that we're going to succeed. But what is the logic, okay? So the logic is the sold August put finances the long bull call. Disclaimer, if possible, at no cost. Now again, no cost does not mean that we don't have a margin. We had a one heck of a margin on the XLK, which was sitting at the 133. We sold 130 put. That ties up 13K. Are you recognizing that? Never mind that we got $2.79 as a credit. That's $2.79 credit paid for $2.71 debit of the bull call that we did, and I believe it was we were long 132 and we were short 137. Okay, this is the kind of ideal that I want, and obviously, as much as I would like that, there wasn't activity enough here. Well, you could. Okay, what can I do? I can do the 125 and sell the 130, but I would need to then get in what for $1.30. There's no way that that $1.30 would pay for my $5 spread. So on a XLF, okay, so now that's on XLF. If I sold 125 put, and let's get very like optimistic for 130, I would need to use that to finance a $5 put. I mean $5 bull call. You think that's realistic? Why don't we just price it? Why don't we just price it? Okay, let's price it. So we're looking XLV. We're going to chain, knock out one letter, F. Okay. It's already here in August, right? So I'm going to just go edit spread so I don't complicate. I'm going to add one more option leg. Okay. That's going to be the sold leg at the 130. Although I would like 133, but there was no activity. And this is a 125 that show me a lot of activity. And when I click OK, what do you think that cost me? $2.93. So if that's calling me $2.93, that means I don't have enough juice. I don't have enough premium for me to do this, because they are giving me only financing of the what? Of the $1.30. And this thing, it's costing me what? Debit. This is debit. of almost $3. So if this is a debit of $3 and most that I can make $2, but I had to pony up most of this money because I only have that's just pass. I'm sorry. I mean, like I would like to do this, but honestly, it's just I'm sorry, I don't want a discussion. There's no trade. There's no trade on XLV. There's no trade on it. Now, there's no guarantee that I'm going to have a trade on XLC or an XLF. But my logic is solid, right? So I'm selling the put to finance the long bull call. Are we good there, Jeff, Mark, Joe? Is that kind of making sense? I mean, I'm kind of talking too much here, but I want you to understand that sometimes you like the chart, you like everything about it, and then there's just no activity. That doesn't mean you can't buy the physical underlying. You can buy the physical underlying, but this is trading options live, and we need to do this. So going back to XLF. Okay, what do we see on XLF? Very similar situation. What kind of trend do we have? Well, the trend is actually from here to here down. We did have due to the earnings, as you know, a pop. Now again, look at that angle. I mean, the 90-degree angle would be when something goes straight up like this. Okay. What is this? This is very, very, very steep. And every time when you have something as steep, historically, what happens right after? We continue going which direction? Down. So I'm not even sure if I'm bullish on this thing. Really, I'm not sure if I'm bullish on a financial. Well, Josip, let me tell you something. Raising the interest rates is good for the banks, yeah, but if people are broke, if they can't pay for their credit cards, are the banks going to be happy? Okay, let's bring in the studies and see what the studies are going to show me. If I'm the only one feeling not bullish on it, and all of a sudden there's inside information, they know something that I don't know, I'll go along with the footprints of the giants. So again, we're on the dailies. We're looking only activity for the August 19, as you can see. And you see, if this is really about to go as high as this zone of the 38, would you not see out of the money call being sold at that area? You would. But be aware of it. This is a $38 product. You ain't going to have a much premium at $38 product. So what do we have here? Well, we have some activity right here, but let me price this thing for you, okay? Be aware of it. Right now, I'm just showing the volume. If I click here, you get open interest. If you click the third time, you get a pricing of it, right? So be aware of it, that this right now, it's very skinny cow. And because it's a skinny cow, it's very, very difficult to do anything with it. Anything with it. So look, you can say like, well, maybe you can sell this particular put for 31. Yeah, and then whatever I get on that 31, it's supposed to be enough for me to pay this spread between, let's say, 32 and a 35. Okay, because we do have some activity now. What is activity? Activity, in my opinion, it's not even worth talking, because it's not in the 4 digits, it's in what? In 3 digits. You're all aware of it, that this is a 369 contract of this 35, which in my opinion, it doesn't even match, because there's supposed to be the red UFO right there, and it's not there. But that's probably only one that still has some kind of premium in it. And then what else are we looking at here? We're looking at the 132 as a possible buy, because it does have activity of $689. But think about this. This is a $3 spread that I need to now finance with whatever I get out of this 31. So let's repeat one more time what we are talking here. I'm going to just take a picture of this, because pictures speak louder than words. Pictures always speak louder than words. So I'm looking at the financials. Okay, so I'm looking at the financials. Okay, actually, this was a V. I don't know why I type in F. Well, now I can type in F here. So Excel F, right? And we were looking at the selling 31 in order to buy 32 and sell 35, which is $3 spread. That's what we're looking. That's what we're looking here. So 35, 32, finance with 31. Ready, set, check this. Okay, this is a $130 product. I type in an F. Oh, that's a really skinny cow. 31 is going to give me 48 cents. Do you believe that with 48 cents you can afford the $3 spread? The $3 spread that involves the 132 and 135. Well, let's try 132, 135. 132, 135. If that price is for 50 cents, I'm going to be wrong. But it prices at $1. And it's very low probability trade. So I hate to repeat this, but I have to. Just like this is a pass, financials are pass too. I mean, at multiple levels, this thing was not. This is like forcing the trade on something that you don't feel good about. You already know the economic situation that we are in here in the United States, and you're like, I'm not so sure. Okay, how about communication? Well, no matter how bad the things are, people still gonna have their phone. They're gonna still have electricity. They're still gonna have a use internet. So they're gonna be communicating. Maybe we could find something on communication. But you know what? I'm so glad that at least I got something, because in this last 10 minutes, if I don't find anything on communication, at least we got something. All right. So again, what is the logic for my XLC? XLC, sell a put to finance bull call. That's a logic. That's my logic. So we need to, again, same steps. Same steps. So here we have a communication. It's a $56 product, so it's at least double the 30. So I like the fact that we do see the target. I hope all of you recognizing that we do see the target. So even without me pulling up the footprints of the institutions, can I predict something, or can I hope to find something? Yeah, my target is going to be right here at 60. And why do I say I want a 60? Because that's where the UFO is. Okay, then what about your buying unit? Well, my buying unit would need to be anything below these green UFOs. That's my logic. Now again, could it be that I pull up now the study option value map? So be aware of it, that I'm going to keep it on a contract. If you do want to look at open interest, you can switch it. If you want to look at the price, you can change it. So be aware of it. You do have ability to change a calculation model from the contract volume to either open interest or a price. But what's the price is going to do? You can probably price it in the head premium, like with experience. So be aware of it. We are just selecting 1 month, which is August. We are going to be asking for how many strike prices are. Well, let's pick 10, because I really don't know if they're going to put the 50 cents on me or not. So create, insert, and what do you see? Oh, what a shock. We did see that they want to get out even before it reaches 60. So they want to get out at what? 59.50. 59.50 they want to get out. And maybe there can be selling to 53. But look at the volume. If I'm talking about 4 digits, what is this? Okay, this 3 just became 5. That means somebody placed the trade while I was speaking. Okay, let's go open interest. Well, there it is. You have a way more open interest here, and we'll just make this a little bit bigger so you can actually see it. So it was a 283 contracts. But over here, they don't even believe that it's going to go all the way up to the 60. They want to exit at 59. No, no, exit at 59. And then what about the financing? There's no financing. Well, 52. Okay. So let's now entertain the possibility. Okay. Sell a 52 put. Okay. And for a bull call, I don't even know what the long leg is going to be, but I know that the one that we're offsetting needs to be 59. I mean, this right now, it's so artificial that I would just throw the towel in and maybe answer the question before I finish the session rather than even entertain this possibility. But let's entertain it. Knocking out F into C. I'm here in August. I'm here looking at that 52. Yeah, that's what we saw right there on the option map. We do have some activity now. I'm going to get the 50 cents. So do you really believe that that 50 cents is going to be worth for me to pay for that bull call spread? That it's going to 59 as a target? Because we saw the activity at 59. Okay, let's again do this properly. I don't want to rush this just because we are a few minutes before the end of the session. So here's my 59, which is way out of the money intrinsically. Everybody following me? This is way out of the money. Okay, so they didn't even pick the whatever we were looking there that the chart supports 60 or whatever. And the reason why they didn't pick that because it cuts the premium in half. Do you want to get here like maybe 75 or do you want to get 45? Well, they want a 70. But then they need to buy something, and only one, in my opinion, that has anything in terms of the activity is this one with the 3 digits. So then I would need to have a 56.59. 56.59. That's a $3 wide spread. That I'm financing it with what? With the 50 cents? That's just not working. Okay, because I'm almost at the end, I really need to finish this up. So I'm gonna just point this out that if this is anything over 50 cents, 3 times more. $1.50 pass. So this session, like what I had in mind and what it turned out to be is not quite the same. I can remember that movie Sound of Music when children line up and this governess come in and she waves the hand and they all sing in harmony. That's what I was anticipating that it's going to be here when I pull up these sectors. I thought if I can get the XLK to sing soprano and then these all sing at least 2 of them in duet, then it will be fine. But no. But I hope that at least the logic was making sense to you. So I was attempting to sell a put in order to finance a bull call. And my aim was to have it at no cost. And out of everything, I did find a one candidate, and this one candidate cost me 271, but me selling of the put was able to bring me in. I hate that I drew this line right here, but you can see how the premium, if this is 320 and 330 and this is 287 and 268, then that number needs to be something in between. So I believe that this is 280 and 284 or something like that, but we did get filled at 279 by the time we did it. So when we did this trade, we got filled orders at 279, and over here we did it at 271. So obviously there's 8 cents difference and that 8 cents is $8, and that's enough to cover the commission. So I hope this was a valuable lesson for all of you. I will be posting these notes right here in a few moments, and I hope to see you next Tuesday. And stay hedged and bye.